Hey, I'm Charles Payne, and you're watching Making Money. Markets mount a massive comeback, ending the day positive. This is after being down as much as 164 points. You won't know from the headlines on your smartphone, but this was a very impressive session. This market could have crashed today. We are just hours away now from Obama's State of the Union speech, where he's going to propose $320 billion in tax increases. Be warned, you're going to hear a whole lot of self-congratulations, but also the new war on the 1%, really a war against you, the middle class. Right now, let's go to Nicole Petalides on the floor of the New York Stock Exchange. Nicole.
Charles, it was an amazing day on Wall Street. 240-point swing, basically, from top to bottom. In the morning, it looked like it was going to be a great market. At one point, you saw us selling off in a big way. Concerns about global growth after the IMF cut its global growth forecast, particularly for Japan, China, and the Eurozone and Latin America, not for the U.S. But that really set the tone on Wall Street. Oil was lower throughout the day. We saw energy stocks slumping, and then things came back. Pretty amazing indeed. So we've lost 540 points in the last 3 weeks. And today, this Monday, we're virtually flat on the Dow. Actually squeezed out that gain. So those buyers did, in fact, step in. Just some movers for you, indeed. Johnson & Johnson, Intel, Goldman Sachs among the losers. Johnson & Johnson, weak numbers there, weak forecasts. Concerns, actually, about the strong dollar, too. Coca-Cola, American Express, and Cisco were the winners. Back to you.
Thanks a lot, Nicole. You know, I am worried about that strong dollar excuse, but there's a lot to talk about, guys. Here to help our investment pros, Hillary Kramer, CIO and president of A&G Capital. Good to have you here. You wore the boots today. Those are your lucky boots. Hey, by the way, guys, joining us for the first time, very first time, Paul Dietrich, Fairfax Global Markets CEO and CIO. Paul, nice to have you on the show. Scotty Nell Hughes, TPNN.com news director. Heather Herzog, our retail expert. The retail stock's getting hammered. We're going to talk to her about that. Matt McCall, founder and president of Payne Financial. A lot to talk to Matt about as well. But first, so let's do it, guys. Let's dig into the real deal. Now, equity futures, this was interesting, right? Because they were higher all morning, and then, of course, they started to drift after that IMF report. IMF, by the way, Eureka, they said the global economy is going to be lower than they thought. Now, the news really, though, didn't hit that much, and then oil was down, too, and that didn't really hurt the market. So we kind of gapped up a little bit higher, despite the fact, too, you heard from Nicole, Johnson & Johnson missed, Morgan Stanley missed, but Delta did beat before the open. The market rallied. The Dow was up 70 points. Then we got that patented drift. You're getting used to it by now, right? And, of course, as it goes down, the proverbial snowball became a boulder. Now, I'm not sure where we can pinpoint, where we pinpoint the tough opening session on one item or another. It seems like a whole bunch of things. And for me, the market probably grappling for a spark, and I think it's a spark beyond money printing. We all know about the ECB. We may talk about that on Thursday and all these positive surveys. So here's the thing, Paul. The IMF, they lowered the global outlook, which to me seemed like a non-news story. I mean, come on, we all they're so late to the party. The real interesting part of it, though, the U.S. GDP, they said, will be 3.6%. In October, they said 3.1%. So that couldn't have set the tone. What's setting the tone for these shaky opens to the market lately?
I think it's the untalked about story. The market's overvalued. I mean, there's lots of ways to talk about valuation, but at Fairfax Global Markets, I do every week, I look for stocks that are low PEs, high return on equity, high free cash flow. I'm only finding 14 stocks that meet my criteria. I can't put together a portfolio with that. What it's saying is that there are no undervalued stocks in this market, and every time that's happened, we've had a pullback, and that's what's going on right now.
Although, then, that sort of reminds me of the famous 1996 irrational exuberance speech from Alan Greenspan. The market got shaky about 2 weeks after that, and then we became irrational for another 4 years. So just because stocks aren't undervalued or fairly valued, Hillary, doesn't mean they can't go much higher.
Right, but I think that the stocks will go higher in the market at the opening today and at the opening every day is trying to figure out if oil and the price of oil being so much lower and continuing to drop is weighing heavy on the market or if it's a boom.
But some days it does and some days it doesn't. That's the weird sticky part.
I know, but what happens, Baker Hughes and Halliburton came out and they said, okay, we're going to cut jobs, guidance is bad, but it was behind us. And then we were all excited about Delta. We saw American Airlines, my favorite, Virgin America, all take off today on these high high
pun
earnings
intended.
number.
All right, Matt, what do you think?
Well, first of all, I don't think the market's overvalued by any means. I mean, historically, it's really not overvalued.
Have you been at Fairfax lately? Have you seen the work at Fairfax?
I have not seen Paul's work, unfortunately.
Okay.
No, I think we're fairly valued. I'll give you that. And no, you're not going to find hundreds of stocks that are undervalued. We're not at that level. We're 200% higher than we were 5.5 years ago. So I get that. But in a bull market, this is normal. We can go much, much higher. We're not even close to being overvalued. So I think there's more way to go. And today, I think, was a great day. Twice as many highs as new lows. Even though we had bad news, in my opinion, this morning, the market opened higher, and we were able to hold that.
What was the bad news?
I don't think the earnings were that good. I think the earnings overall, take Delta out. That's an anomaly. That's a small sector. Take them out of it. I don't think the earnings were that good. IMF, we knew that, Charles, but it was still negative news. Home builders got crushed today. So to me, it really wasn't news, a bullish news day, and we still closed positive.
All right, guys, on that note, let's stop and blow the first whistle, open the first page from Payne's Investment Playbook. You know, a few stories today that might help us understand the state of the consumer, because we're really trying to figure this one out. Now, of course, we've been talking about this Delta report. Just so that you know, passenger revenue was up 4.6%. Cargo was up 2%. This line they call other was up 21%. The other business is pretty good. Of course, with jet fuel prices plummeting down to $1.56, that's down 19% in 1 month. 46% in the year. It would seem like the airlines, to Matt's point, are just money-making machines and will be that way for a while. Then there was Target. Now, no earnings here, but I think a few hackles got raised when they announced yesterday we're going to start carrying Lilly Pulitzer. Now, of course, the news didn't really have an impact on the stock, although it did light up social media big time over the weekend. I want to hear what you guys have to say about that as well. And there was, by the way, a time when such news, though, actually did save this company. Look at this chart. 2003, the announcement of Isaac Mizrahi stopped the stock from sliding. It was at 29 bucks. It went on to rally over the next 4 years to $70. And that brings us to our next real deal. And Heatha, we're still looking for signs that the consumers are going to live up to this renewed confidence. We keep seeing these higher confidence and these surveys. Maybe we saw it in Delta, but did we see it anywhere else?
I think the reason why we're seeing this confidence be boosted, it has something to do with something called the Henrys. So the Henrys, I'm going to spell it out for you. It's the higher earners, not rich yet set. So these are the people that were making around $170,000. They wanted to live like the ultra rich and wealthy, so they were buying all these high-end things. Now they're spending like the middle class. And to your point with Lilly Pulitzer, this is the reason why things like Lilly Pulitzer, the collaborations at Target, do really well. And to your point on Delta, the reason why the consumer is not really going to affect the consumer on that end is because we're not there with the gas prices.
What I'm confused about, though, is when is this great consumer confidence at a 10-year high manifests itself on Main Street? When are people going to start to really show us that they're confident?
It's not going to happen until those gas prices are sustained at low prices. And here's the problem: I don't think they're going to be sustained. I think those prices are going to go up fairly quickly.
That's more than gas, though. If we're just relying on low gas, then we're in trouble. I mean, what else is going to drive the consumer? We need to have something else.
I think it's going to be wages myself, higher wages. We'll see. Now, I got to tell you, Scotty, there was outrage on this Lilly Pulitzer thing. You can see the threads from Twitter. It went crazy. I also got an email from my wife on this. She says shopping for Lilly's clothes at Target will take away the great shopping experience you get at her stores. It will downplay the brand. Lilly is not rolling in her grave. She's spinning in full velocity. I think you're a fan of Pulitzer as well, aren't you?
I am, and I think it's your wife. She has amazing taste, impeccable taste. But the truth is, I think this is a great thing. You know, it's a win-win for Target. Target continues to try to separate themselves out from Walmart, and they're doing it by incorporating these brands. And if you're a follower of these brands, like you were with Tory Burch or Isaac Mizrahi a couple of years ago, you know the difference between a product they sell at Target and a product they sell at their stores. This just opens up and expands their brand. And granted, the fashion snobs on this stage that disagree with me,
oh my goodness,
I just want to sit here and say that, you know what, maybe if you supported the brand more, they wouldn't have to be doing this.
I think fashion is for everyone, by the way.
I don't know what that means, but Paul, I do want to ask.
That was a gauntlet. That was a fashion gauntlet thrown down
Paul,
there.
here's a dirty little secret, though, okay? Over the past 10 years, Target, they've bought back 40% in their stock. They've increased their dividend on average 20% annually. And here's the real question. Are we in an environment now where businesses, they don't have to execute anymore? They can engineer a stock market rally because Target's at an all-time high despite the well-known problems they've had.
I think you're right. There is a lot of engineering, but I think that's been the case for the last 5 years. However, if you actually look at what's happening on the ground today, we tend to look at the economy through a rear-view mirror over the last 5 years, but there's a lot of facts on the ground that say that things are changing. I mean, wages will be going up.
But they haven't yet.
They haven't yet, but one of the interesting things that no one pointed out in the jobs report is that we're starting to see an increase not just in the McDonald's type of jobs, but we're seeing it in mid-skilled jobs, which are higher paying. They need some
So
college.
are you contradicting yourself in a sense that you don't see any value out there, but you see the economy taking off? Can a strong economy bolster the case that stocks can go higher?
I think in the end, earnings drive the stock market, and so long as earnings go up, and I think the oil price drop helps that. I think as productivity is going up, that will drive it up. So these are the things that are happening, and it's not just financial engineering.
All right, so let's leave it right there. Paul's gotten the ball rolling, but you're going to hear a whole lot more of this applause and congratulatory comments tonight on the State of the Union address. But I'm going to tell you right now, and you know, because you tell me, it's not all that it's cracked up to be. We're going to tell you what the real State of the Union is in just 3 minutes. Stay tuned.
Just because the record has a groove, don't make it in the groove. But you can tell right away it's Dr. A when the people start to move.
All right, guys, I got to blow the whistle again, open another page from Payne's Investment Playbook. Now, as someone that loves the theater of politics, there's nothing better than a pomp and the circumstances of the State of the Union address. But after all the backslapping and the applause, it's really, let's face it, just a selling tool for the standing president. So we're going to hear a lot of self-congratulations tonight, and it will sound like a fairy tale for some of you guys. Maybe a country you don't live in your minds, the real State of the Union is completely different. Now, we just had a Fox News poll. 64% of people said that the nation is still in recession. Now, the good news, yeah, it's down from 75% or 86% in 2010, but certainly not the stuff of victory laps. And then there's a Pew poll. If you guys like a variety of polls, even more dire. 55% say they are falling behind, not moving ahead, falling behind. And then a Wall Street Journal NBC poll, they asked people, describe the country. Divided, troubled, deteriorating. These are your top three. How many said strong? 3%. That's scary, shocking stuff. And finally, bank rate. They asked people, hey, if you had a $1,000 emergency, how would you pay for it? How could you get the money? Only 38% of Americans said they can get it from their savings account. All right, guys, so this brings us to our next real deal. Paul, listen, surveys say one thing and the actual data says another. Where do you think the economy stands? You kind of talked about it a little bit, though, but with respect to, we're hearing some of these, the numbers are shifting. Even the bad numbers are better than they were a year ago, a few years ago. But when did we really see the reality of that? Because, again, you could argue that all the pieces have been in place for wages to go higher a year ago, for the quality of jobs to morph a year ago. And still, every time we get these numbers, there's a lot of buts in those,
Look, there's no question that the politicians have really slowed the economy, and we should have been much further along than we are. But wages are a lagging indicator. They always come last. We see the lower level service jobs come first, then the mid-level skills, and then the skills that require a college education. And those are coming. You can't be creating 200,000 new jobs every month without having some pressure on wages going up. Wages will go up, but they will always lag the economy. You're going to see the economy go up first before you see these wages.
What do you make of it, Hillary?
I worry about wages. I really do believe that outsourcing and the lack of innovation and the fact that where we have had growth, like data mining, cybersecurity, they're not labor intensive. So I am concerned, and the State of the Union address is going to be very important tonight, because what we need to hear, we're not going to hear, unfortunately, which is
we need to hear?
We need tax cuts. We need corporate tax cuts, and we need these companies with billions of dollars abroad to be able to bring it back tax-free and put that money to work, building factories and building research labs.
But taxes will be mentioned a few times tonight, Scotty.
Right.
Cuts won't be behind it, but certainly the word tax.
And you talk about the market, what actually affected the market today? To be honest, honest with you, while you want to sit there and say there were outside influences, the truth is we started to hear what the president was going to say tonight, and that he was going to start to be raising taxes on the middle to upper class. And so that started to come out. And I think that might have had some
That was out
effects.
yesterday.
But to the truth, to what Paul said, the only thing that I have to say is you can't sit there and look at history, because right now we're dealing with a business environment unlike any before with our health care plan. Businesses are incentivized to have part-time employees, to hire new people, and not necessarily encourage growth amongst the ones they already have. That's something like we've never had before within the environment that we live today.
Ethan, you saw those three when people were asked to describe the nation. I mean, maybe we're in this perpetual state of woe or self-pity, but when you see the top three descriptions, so scary, deteriorating, you know, just falling apart, what does that tell you, though?
I think we need to see, I mean, we've been saying this forever, but we need to see some sort of change, but it's not happening. But I think, again, it needs to come in the form of wage growth and job hiring. That's where it needs to come. And to be honest, you know, you look at other parts of the world, people are able to sustain themselves on $2,000 a year. I think in some senses, you know, we may have to just like pull our bootstraps up and kind of...
So in other words, stop whining.
A little bit, maybe.
Heath's message of the day, stop whining.
Yeah.
I do think, though, that these tax hikes are certainly the wrong way to go, and I think it's a terrible waste of an opportunity. But we're going to cover, in fact, Neil Cavuto, he's going to have more on the economics of this whole thing and everything else associated with the State of the Union right here on Fox Business. Remember, nobody covers this better than Neil. His coverage begins at 8 p.m. Eastern Time. You know, we do take a lot of things for granted. Even analysts don't highlight peace. I'm talking about global peace in their models. It doesn't feel like it. It's a very peaceful time in the history of mankind, and it can make you a lot of money. I'll explain in 3 minutes.
It ain't me. It ain't me. I ain't no senator,
You know, I think it's fitting the day after the nation celebrated Martin Luther King Day to discuss his message of peace and freedom and why it is the perfect backdrop for economic success. Now, I got to tell you something. Despite the headlines, you won't believe that this is one of the most peaceful, I'm talking like years, in the history of mankind compared to all the other global tribulations out there. I want you to take a look at something. This is over the last century or so. This is deaths per thousands, 100,000s of people in this world, and how the conflicts from the Soviet collectivism to the Great Terror, of course, Nazi, Soviet, and Japanese genocide, all peaking toward the end of the World War II. Some of the other things that we've seen over the years. This is where we are now, and believe me, it's gotten a lot better. It was worse when mankind was just fighting with swords and spears, believe it or not. And so what's the opposite of this? What's the flip side of this? Well, if you turn this upside down, what you'll see is a stock market that's been absolutely phenomenal. I know, you know, here we go, for instance. Okay, this is your crash. This is when we had the genocide going on. As we turn this around, as we've created 1 billion middle-class people around the world, as we've created opportunity around the world, the key for all of it, no matter what you base your assumptions on, if you're going to analyze the market, particularly from a macro point of view, you begin with peace. I know the headlines are terrible. We see the terrorists. We see Boko Haram. We see all of these different things that are going on right now. But for right now, I think that we've come a long way. I think we're going to continue to go a long way as long as we can keep peace, which is why we've got to invest in defense, which is why we've got to stay strong, which is why America is probably going to have to be out in front for the entire world. But as we are, this peace is going to continue to create wealth, not just in this country, but for the entire world. So let's discuss that right now, guys. All right, Matt, now, listen, I know we all take a lot of things for granted, especially here in New York, where the latte sippers seem to be the ones who take it for granted most. And I'm not trying to, you know, well, I am kind of dissing him a little bit, because I do think it's unfortunate that a lot of people, you know, listen, they don't like the military, they don't like defense spending, we should shut down the military bases. If we don't have peace around the world, nobody has anything.
No, we don't. And as far as, you know, the global economy shuts down. You don't realize what a few terrorist attacks could do to a global economy. And that's exactly what they're trying to do, is really throw a wrench in our financial system. So something big happens here, people stop going to malls, people stop spending, then more layoffs. So the peace is you need to have that to have the stock market that we're having now. Without it, it'd be a complete chaos.
And the irony, of course, Scotty, is the proliferation of weapons around the world, missiles, bombs, handguns. Even in this country, I saw a chart today, the states with most handguns have the lowest crime rates around the world. It would seem counterintuitive. The more tanks and bombers and things that we sell, you would think the more people are dying and being blown up. But the exact opposite has happened. Over the last decade and a half, 1 billion people from around the world have joined the middle class.
Oh, definitely. But you have to look over at Japan, who've actually, for the 3rd year in a row, have beefed up their defense security. Even though, since World War II, they technically should not be doing that. And they're going, why are all these people getting a little bit scared? Taiwan has done the exact same thing as well. And I think the issue is that a lot of people are fearful of superpowers like Russia, like China, beefing up and sitting here and relying on the United States as we're taking away from our defense budget. And more importantly, with the Chinese owning so much right now of our debt, how much can we really defend them if China has to pull our card and say, you know what, back out, this is our event?
Well, I think it was implied when we made China and Germany change their constitutions that we would step up to the plate. But Japan, being smart, they're stepping up to the plate beforehand. I know you want to get real quick.
Smith & Wesson, it was up 17% today. Handgun sales, rifles, Northrop
Ruger, Smith & Wesson, yeah, love them, and all of them. Okay, guys, now part of President Obama's State of the Union address will include taxes that go, in my mind, well beyond punishing the rich. That's going to be the narrative. I also think they're actually a part of a wider attempt to right the injustices of yesteryear. I'll explain it all when we come back. All right, guys, a lot tonight with the State of the Union address. The president's going to address taxes. But I'm going to tell you right now, this whole narrative, it goes way beyond punishing the rich. And I think it's part of it is an attempt to right the injustices of yesteryear through savings caps and taxes on inheritance. Maybe not available, let's face it, 50 years ago, certain people couldn't buy a house. Right? So I see this all as part of that whole thing, using envy, even the hatred of the rich, to unleash a whole torrent of new taxes. But listen, it's not a new ploy. And I'm telling you, torchbearers, you better beware, because taxes are the kind of beast that that once you turn them loose, you can't leash them again. And I want to give you an example. Case in point, 1966, United States Treasury Secretary Joseph Barr, he puts out a report, 155 high-income households pay 0 federal taxes. 0! I mean, this thing caused such an uproar. By 1969, members of Congress, they were receiving more letters about the 155 than the Vietnam War. So what happened? Of course you know what happened. A new tax was created that became the alternative minimum tax, right? Now, this tax, well, it's been amended a whole lot of times in recent years, but to give you an example of how insidious this thing became, remember the number 155? A couple years ago, it was going to hit 33 million people. Even as it stands now, 4.5 million people, mostly middle-class earners, will be hit by this tax that was supposed to reel in 155 people. Now President Obama wants to go after the IRAs because there are 300 super wealthy people like Mitt Romney. And wow, they've got more than $25 million in a retirement program. And to make the program fair, well, ultimately, it's going to be capped $3.4 million, and you should be able to live off $200,000 annually, right? I mean, I suppose any more than that, you're just simply greedy. How about the irony of it all? You go back to 1966, those wealthy families earned $200,000. That put them at the top. Right now, let's face it, guys, a family in New York City will barely make ends meet. So, Hillary, a lot of irony here, and there's a lot of moving parts to what I talked about. One, I think the president might feel like because it was so unfair for certain people 50, 60 years ago that if your grandmother was able to buy a house and give it to you, it's unfair that my grandmother wasn't. So you should be paying full taxes on all of this. And I get where the president's coming from, but why punish you and your grandmother for racism or something that was involved in the banking industry? At the same time, this is going to deter people from buying houses, from starting small businesses. This is the craziest idea I've heard in a long time.
Oh, I agree, Charles. This is just absolutely ridiculous. And in terms of these IRAs and having limitations, the wealthy, they don't really pay. The very wealthy, those billionaires, find a way not to pay any taxes. So putting these caps on are kind of ridiculous. It's just really berating the topic even more.
Paul, a cap on an IRA, it just seems ludicrous to me that 10 years from now, 3 million won't be what it is now. 20 years from now, 3 million won't be what it is now. You know, other than a gargantuan money grab and some other factors, why even put it out there?
Well, look, there's a principle involved here. I mean, the great Congressman Jack Kemp used to say, you know, what you tax, you get less of. What you subsidize, you get more of. And
so they want less savings.
Crazy to tax savings and investment. This is a disastrous policy. We need fairer taxes, tax system. There's no question about that. But this is insane.
What do you think about it, Scotty?
Well, it's a lot easier to sit there and tax people that are going to be dead soon or already dead because they don't need their votes anymore. When it comes down to it, people in politics, that's usually what they're for. And so it's
well, Chicago, you need them, but they know how to get them.
In most cases, you don't need their votes. But the truth is, this is all about going after the people that they consider owe things, that they don't necessarily need the money. My fear is once they've depleted all of this, are they going to go after maybe the future spending? Hey, guess what? You have a college degree. You have a chance of making more money in the future. I'm going to go on and tax you.
I'm going to tell you exactly what the next move is after this. Taxing assets. You have a sculpture at home that's worth $2 million. We want you to pay 1% tax on it every year, even though it doesn't give off cash. That's the next goal because we're building this gargantuan welfare utopia. And here's the honest truth, Matt. No matter how much we tax the rich people in this country, it's not enough to pay for all of the generous programs that we would like to put out there.
Exactly. And you, like you said earlier, it may go after the rich initially, but it always trickles down to the middle class. And the politicians, they have this mindset that if we tax more, it brings in more revenue and helps us. No, by taxing more, you can actually lower consumption. And at the bottom line, you may not actually bring in that much more money. So at the end of the day, they're really hurting themselves by, it's going to hurt the economy. It's
really nuts. It's never worked. Now, by the way, the estate tax isn't just a rich people problem. Soon, it's going to be a killer for the rich and non-rich alike. Let's say, okay, I want to give you an example. Let's say that your mother, and I was trying to talk this with Hillary. Let's say your mom leaves your house and it's worth $250,000. You sell it for $300,000. Your tax now would be based on a $50,000 gain. But if President Obama gets his way, you would have to consider that your mom and dad paid $50,000 for the house. So your tax would now be based on a gain of $250,000. That is a great way to soak in the dough. And of course, exact justice, like I said, for people who may be in the best, couldn't buy those houses. So here's the thing I want to talk to you about on this, Heath. Double taxation on inheritance, just the idea that, I mean, the home was a cornerstone. You know, again, I don't think any of these things will go through, but the idea that it's being pitched to the American public as something to consider, then why would I buy a house after such a tax is put in place?
It would be very hard to. And you know who ends up really getting squeezed in this is the middle class. So we're talking about this. The rich will find some sort of loophole to get out of this, right? And these benefits that are supposed to be meant for these lower income people, you know, that only creates this like backward wealth effect. We talk about that a lot. So the benefits aren't even really helping the lower income people. That savings that they're supposed to be putting away, that little income that they're making, that's not helping. So who ends up paying? The middle class. Those people that want to go out and buy homes. Those people that want to go out and have their first starter home.
Look,
that's not going to happen.
I took these notes today, and this really blows me away because the president has two things he can do tonight. Essentially what he's saying is that we're so far apart, me and the Republicans, that I'm not even going to put together a proposal that makes half-ass sense, right, that maybe we could come to common ground. But I got to tell you, in 1997, right, Bill Clinton's last 2 years in office, he put out 57 policy proposals. 33 of them passed. This is passed with Newt Gingrich and company. 33%. So far, President Obama, to this year, in the State of the Union, has brought up 209 different calls. Only 64 have become laws, the lowest since Ford. Paul, help me out with this. I got to understand, why wouldn't the president even try to put something out there tonight that would make sense, that would say, okay, don't tell me you're trying to find common ground with these crazy ideas you're throwing out.
Yeah, if you want to make sense, politics is not the way you go about it. This is a typical Washington dance, and those of us who live in Washington, D.C., we see it all the time. What he is doing is he is putting out his proposals for tax reform, which is he wants more money from taxes. Mitch McConnell and John Boehner, they have said, look, we're willing to do tax reform, but it's going to be tax neutral. We're not going to have any big increases so you can spend it on your crazy programs. And so what's happening is that we're starting the negotiations tonight, and that's what's happening. And eventually, I think we will get some movement toward a fairer tax system, because when you see Google paying 3% corporate taxes, that's just a crime, when the only people paying full taxes, corporate taxes, are small businessmen.
And oil companies. All right, real quick.
I adore your optimism. I adore your optimism, but unfortunately, I think this is just another showing game, and you could do a drinking game and be more successful tonight watching this game.
Well, a lot of us will be drinking while we watch this. Hey, what about this? Paul went from a liberal to a conservative in just 30 minutes. I can't wait for the rest of the show. Hey, Neil Cavuto, he's going to have a whole lot more on President Obama's tax hikes proposal in this rest of the State of the Union speech. Remember, you've got to watch it right here. It begins at 8 p.m. live right here on this channel. Hey, sportsmanship was questioned in the girls' high school basketball game. The score, only 161-2. But is it a good lesson in life for the team that lost? I think it was. Tweet me your thoughts. What if your kid was on that losing team? I'd say buck up, man. Buck up. We'll be right back.
I know it's crazy, but it's true.
It's time for Upon Further Review.
All right, sports fans, a couple of days ago, the AV Hawks beat the Bloomington Bruins. Drum roll, score. 161-2. Well, it resulted in the AV coach, Michael Anderson, getting a 2-game suspension. The Bruins coach, this is the losing team, issued a statement saying, people shouldn't feel sorry for my team. They should feel sorry for his team, which isn't learning the game right. So, Scotty, upon further review, which team learned the most from this debacle, and should the coach have been suspended?
Absolutely not. I think the winning team actually learned the most, but a bad lesson that winning was being punished. I mean, these kids have practice, and you look at this environment, these are kids that choose to go to a public school over the much more known private school where the basketball programs are emphasized. Congratulations, kids. I think actually the AD of this school needs to probably be the one suspended.
What do you think, Paul?
You know, when I played baseball, football, and basketball in Catholic high school, they taught you two things. One, how to win and lose gracefully, and secondly, to always play your best game, always give it your all. And this guy was being criticized for telling his students to do exactly that. The principal, you know, suspended him, and the other team's coach actually said he was ethically challenged. I mean, I think that principal ought to be fired. Can you imagine Steve Jobs in the real world saying, "Oh, I'm not going to produce a good iPad or iPhone because I don't want to embarrass."
You know, the CEO of Tesla.
I don't want to embarrass Microsoft. That's crazy. That's not the real world.
I don't want to go ahead and fly the feminist flag here, but I'm going to go ahead and fly this flag. It is a girls' team. What kind of message are we giving these young women?
Hold on one second. The
winners are the losers.
We speak so much about women not making it in the corporate world. This is where it starts. When you start telling them you can't lose.
That's
you can't lose by a lot.
I agree with you. We should have told them, go for it, win.
Exactly.
It's absolute, that coach should not have gotten fired.
The second half was all kids on the bench that never get to play. Some girl hit 8 out of 9 three-pointers. That was probably the greatest day of her life, the best she'll ever play. And you know what?
Agree.
Scotty was actually right. You need to learn how to win.
We got to get Hillary in here. Hillary, the mother, I can feel it already. It's tugging at her heartstrings a little bit.
I believe that this is a girls' high school basketball team. Enough. It wasn't necessary. This wasn't professional sports.
Oh, Hillary.
It was girls or boys.
My daughter plays, she plays competitive chess. She even plays chess amongst adults, and she travels around the world and does this. 1,000 people can play and 15 get a trophy. She's fine with that. But when you're losing and you know you can't win, you put the chess piece down, okay? I've lost. You know, this didn't make any sense.
That was on the losing coach. He should have pulled his team and said, we can't compete. But I think if we're talking about changing the dynamics of what a girl should be and what a boy should be and competing in the 21st century, hey, I saw Seattle Seahawks making the most improbable comeback over the weekend because they didn't give up. All right, guys, a rough start for the first couple of weeks of the year, but also this is a great time to find diamonds in the rough, and I think I got one for you. I'm feeling pretty good. I had one disaster today, but about 4 or 5 winners, and I'm going to tell you about this one because, after all, we are here to make you money.
That's why I'm easy. I'm easy like Sunday morning.
All right, guys, let's do it. Let's get down and help make you some money. I like this company called Gentherm Incorporated. The symbol is THRM. Had a really good session today. They're in a few areas, as the name may imply, in automotive. They do the seats, the interior, that thermal management. climate control. I don't know about you, but my wife loves the climate control stuff. It bothers me a little bit. The seats get too hot too quick. It works too much. Power generation, industrial materials. Last quarter, they did very, very well, I tell you. Revenues were up 20%. Margins, gross margins expanded to almost 30% from 26.8. They've got a great platform with the General Motors SUV platform, Jeep Grand Cherokee. You see the sales on that bad boy absolutely through the roof. Now they're branching out. They're doing some office furniture stuff for Herman Miller, spa, dental, stadium things. PEG ratio 0.81. A string of earnings beats. Although last quarter they only beat the street by 14%. That was like the lowest in a few quarters. Still, today it's on the cusp of breaking that 50-day exponential moving average. I think a move through 40 gets you a trade on this for 10%. I do like a longer term, though, the $53. All right, Matt, what do you think of this one?
We talked about the streak of beating earnings estimates. 5 straight quarters, average of 46%. I mean, that's some big beats. This company's been way ahead of it. I love the fact, too, they go after luxury models. Luxury car sales have been really good because obviously that they're going to have this. And what I do like, they're coming out now. When you have electric vehicles, it gets very hot, that battery. They have a system now that's going to cool that down, which have more miles to you get on each.
Don't pour water on it.
Yes, don't pour water. But I love this and broke out on chart as well.
What do you think?
Great company, Michigan-based, and is really riding beautifully that cycle upwards in car sales, right? We have the oldest fleet ever in the history of
and we're
cars.
seeing these now. American Axle had good news about a week ago. I think LEA is starting to come on. So, you know, Paul, do you follow these? Because can this get in the Fairfax wheelhouse a little bit?
Yeah, the fundamentals are actually very good. They have a moderate, not a low, but a moderate PE. They have good cash flow. They have good return on equity. And let me tell you, once you get a car with heated seats, you're never going back.
All right, and on that note, let's leave it there. How the State of the Union impacts the economy, markets, and Main Street thinking. You don't want to miss this. All right, so like last Friday, Schlumberger, they posted quarterly results. They beat the street, top and bottom line. But the rest of the report, I got to be honest with you, is somewhat unsettling. I want you to take a look at the quarter. Pretty good quarter. Remember, this is the oil services company, right? $4.3 billion in revenue in the U.S. That was up nicely. They bought back $1.1 billion of their own stock. Then they felt so confident, they hiked the dividend by 25% to 50 cents, and they laid off 9,000 people. Well, the stock soared. It was up 6% on this news, but it had a real unseemly feel to it all. And in my mind, this company is tone deaf as any politician with respect to the goals of the average American. I got to be honest with you. It's this kind of stuff that helps President Obama stoke the anger amongst the masses and push for legal theft of hard-earned money from successful people and businesses. It won't be these multi-billion-dollar companies. It's going to be small businesses. And just wait until Elizabeth Warren gets a hold of this. I'm a capitalist, but there's something to be said about being smart enough not to make yourself the target, not to make the notion of the profit motivation being a bad thing in these times, and actually letting the people who are actually letting us down get the leverage in the public court of public opinion. Guys, listen, I'm all for making money, but I don't see how you buy back $1 billion of stock and fire 9,000 people at the same time. It's tough.
But this is what's going on. This is the financial engineering. Look at IBM today. IBM is just a disaster. And think of the layoffs that they've had. Even when we hear from General Electric on Friday with their earnings, the same thing. You know, they're going to come out and at least be flatlined or higher, but you know, thousands
why is
of people
financial engineering bad? Why do we keep calling this bad? It's what the company has to do.
No, financial engineering. Think about the oil.
You're saying it's bad laying off.
Matt,
Hold on a second. IBM laid people off, and they're still missing estimates. So obviously they should be laying more people off.
But maybe they've had to lay people off.
I think it's different because they are in a tough situation. What would be wrong with Schlumberger not buying back $1 billion in stock, laying off the 9,000 people, seeing what happens, because every week the oil rigs keep going down anyway? What would be wrong with just having your stock go down for a little while if you're a CEO of a major company?
You're saying so not laying people off? You're saying
no. If you have to lay people off, you do, because we know that oil rig
It all
counts are
depends
down.
if you're borrowing money to buy back that stock. That's really the key here. And some of the top oil companies have borrowed money, and then when rates eventually go up, and I don't think it's going to happen now, but it will happen, and it's going to hurt.
Well, it depends on where you buy it, right? Because historically, companies usually pick the top when they really load up on their own stock. But what I'm saying, Paul, is we talk on this show about, I'm trying to convince people to invest in the market long term. when a company is micromanaging their share price to the point where they're in the oil patch, oil is collapsing, they're not even sure what's going to be around the corner, but they still find the need to spend $1 billion on their own stock while firing 9,000 people. Is that okay with you?
Yeah, I think if you're the CEO, you've got to do what's right for the company.
Wait, but no, but it's not right for the company. It's right for his bonus because it raises earnings per share, and that's what his bonus is based on. That's what the board
hey, if you're an investor and earnings per share are going up, the stock price is going up, and that's what you want. Also, Baker Hughes and Halliburton announced layoffs today too. We know that they're going to have slow rig growth.
I don't have a problem with the layoffs. I do have a problem.
I
have a problem with the layoffs and $1 billion happening simultaneously. I think that's a problem. And also, historically, these guys don't have a great track record for picking bottom. So the idea that you must buy back your stock today, keep the $1 billion in the bank.
No, look, you have to do the best for your money. And right now, if you're in the oil services business, putting it into rigs for drilling is a crazy idea.
I'm not saying that.
Buying back your stock is the best use of your money.
We'll see. If the stock goes down 20% for the rest of the year, was it a smart move?
No.
It's not. It will go down less because of what they did.
Time now for the marching orders. All right, and I want to get some final thoughts on the State of the Union, how it's going to impact the economy, Main Street, and Main Street thinking more than anything else. All right, Scotty, President Obama says he's emboldened. He feels great. Forget the midterm elections. Have you seen those poll numbers? He's going to hit this populist theme hard. What do you think ultimately it means to Main Street?
Main Street, well, first of all, Barack Obama thinks he's Robin Hood. He thinks he can sit there and, Robin Hood took from a corrupt government, gave to the people. He's doing the exact opposite tonight. He is going to literally take from some good people and give to a corrupt government. That is not going to go over well with the American people. And this is just, like I said, you're better off playing a drinking game tonight.
Those kinds of remind me of your neighborhood mobster, right? Because there's a big with this government. They're going to tax $300 billion, but I did the math, and what they're going to give back in return is like $220 billion. Where'd the $100 billion go? Is that the big? Is that the commission? What's going on?
Yeah, I think that's something that we're definitely have to look at too. But we've mentioned this, Hillary mentioned this too, corporate tax rate. We have to see what he's going to say on the corporate tax rate and if anything is going to change it, which I don't think it will.
No, that won't happen. All right, guys, real quick, you guys treat it like crazy, particularly on that last subject. All right, Prandoff said it's life. The losing team coach needs to train his team better. Boo Ratley said coach for 20 years plus could have done that numerous times, never did. Some schools can't find players to fill the roster, and that's why. All right, guys, great show. Paul, you did fantastic. Hey, remember, join us every